Wonderla Holidays, is joining us to talk more about the way forward. In fact, Arun, I remember when your IPO was launched and I had visited your park in Bangalore. I'm sure you have expanded business quite a lot since then. Now we are hearing reports that you're also looking at new states, Goa, Punjab, MP. What's the expansion strategy? Talk to us about, from currently running 3 parks, how many more are likely to get added in the next 2-3 years?
So thank you so much for having me on the show, and thank you for those very kind words. But yeah, it's been a pretty interesting, a very phenomenal year for us, coming out of the pandemic. Right now, we have 3 parks, like you rightly said. We have Cochin, Bangalore, and Hyderabad. We have 2 parks under construction. One is in Chennai and one is in Odisha. The Odisha park, I think, should be on stream within about 18 months to 20 months. And Chennai, we hope to complete within 2 to 2.5 years from now. So that's the near-term CAPEX plan to new states.
Right. And you're going to fund everything from internal accruals, or any fundraising plans also which you have in mind?
Currently, we will be doing everything with internal accruals because we have cash on hand, and we have not been able to do the investments because of COVID. So because of that, I think we will be able to manage the next 2 years of our CAPEX with our own internal accruals. At which point, if we have further states that we are talking to, like Madhya Pradesh, Punjab, we are also talking to the government of Goa to see whether we could do a park and a resort project there. So as and when these plans materialize, we will look at maybe raising funds. But for the next 2 years, we don't see any fundraising required.
Right, Arun, this is Vinny joining in the conversation as well. Right now, you don't require any funds, but just could you give us an understanding also in terms of this tax waiver that has come in for you for your Chennai project as well? How do you look to maximize those benefits? How will they shape up in terms of your bottom line coming in there as well?
Yeah, so if you look at Tamil Nadu, it is a slightly unusual situation where they had an extra 10% tax on top of the 18% GST for all entertainment and amusement park sectors. We had felt that it was unfair to such a heavy capex kind of industry to have such a high tax on this. And so we had been talking to various state governments in Tamil Nadu regarding this, starting with the AIADMK government when we signed the memorandum of understanding almost 8 years ago now. But I think finally it has come through, and it's been a bit of it's a very long delayed negotiations and a lot of back and forth with the government. But they've been extremely receptive, and they understand the need to have a uniform tax rate for this kind of a business, and so that has come through. We do feel that 18% GST itself is a lot for entertainment. And then to have more tax on that, it would have seriously hampered the viability of our project. So we're very glad that that has come through for us.
Okay, Arun, and also just in terms of, summer season, Ajay was highlighting that holiday season is here. Everyone's going to be going to those parks as well. How was the summer season that panned out for you, and how was the run rate in terms of % of occupancy also for your resort? Was it around the 70-80% mark?
Yeah, so we are expecting this year to be more of a consolidation kind of year, because last year we had such a high growth in footfalls. Our parks are practically running full, during summer. They were running full last year also. They're running full this year as well. So we don't see much of footfall growth. We do see some upside in terms of revenues because of ARPU changes, our changes in our F&B and retail offerings. So we are confident that we will do better than last year. And it's been quite encouraging, the trends that we're seeing. The resort also has been doing exceptionally well. We've also changed our, ARR in terms of we made it a more premium offering, and we are still seeing good occupancies comparable to last year. So we are happy to see that. I think this quarter also should be good for us.
I'm looking at your numbers this time around. Broadly, you are having a run rate of, say, 400 crore on the top line and about 120-130 crore on the bottom line front. But if I were to look at 3 year far out, when these 3 of your new resorts, which are work in progress, are fully built in and start contributing to numbers, how much can it catapult your top line and profitability to, say, in a 3-year time frame? Are we talking of say doubling our numbers or thereabout?
See, the Chennai project will be one of our largest projects, comparable to, for example, say Bangalore. So you can expect a top line, and comparable to that. But obviously, it will take 2-3 years for it to ramp up to that level. We don't expect the first year itself to start with such a high, ARPU and high revenues. But we are confident that within 3 to 4 years, 3 years even, I think we will reach where Bangalore or Hyderabad is. And Odisha is slightly different. It's it's one of our asset-light parks where we are not going to be investing, 400 or 500 crores. We are looking at a total CAPEX of only about 150 crores. But we are going to be expecting about 60 to 70% of our revenues compared to a large park coming from Odisha as well. So that will give you a ballpark of what we are expecting from Odisha.
Okay, before we let you go, just a quick word on how are you really looking at the consumption and spending pattern of people who are actually visiting your parks? Because apart from the rides, I understand you have some rooms also in your Bangalore one, so
That's
for sure.
correct.
You have a lot of eateries around. In general, you would be having a good pulse on, are people in the mood coming back to spend open-heartedly, or are they still holding back a bit?
I think India is always going to be a very price-sensitive market. Whether it's going out or or a holiday or buying your next car, I think we are very price-sensitive as a country. So people are, they're cautious about spending. But having said that, I do see a change in terms of propensity to spend on day outings and leisure. I think leisure and outings are seeing an upward trend, especially post the pandemic, where people have figured out that they need to also enjoy their life a little bit more. So I think I see that shift happening. And of course, when people do come to our parks, they are also spending more. So that, I think, is also in line with what is happening across the world. I think India is also we have a very aspirational emerging middle class, and they also want to do the things that everybody else is doing all over the world. And I do see that the per cap spends will go up in the coming years for all kinds of leisure activities.
Okay, Arun, thank you so much for joining in with us this afternoon, giving us an understanding of what should we be expecting from the company, just not this year, but next couple of years as well. Thank you so much for joining in with us.
Thank you.
Let's move on. And today we had